Well, greetings, my beloved clients, friends. I want to do a video as a portfolio update on one of the top positions in our account, in our portfolio. It's called Boot Barn. We've owned it for almost a year now. And yesterday, Charles and I went to the Boot Barn Annual Shareholders Meeting on your behalf. And so I wanted to share with you some of the details of that meeting and our thoughts on the company, whether we want to continue to hold it or not. So we bought it, I think September, almost a year ago, last year, around $80 a share or so. And right now it's around 140 or so. So it's up about 75%. It's been a very good position for us, and we bought it like about 3 or 4 weeks early, man. We bought it and it like around 80, I think in the low 80s, and it got down to like 67 within a month, and then but it bottomed out, and which was a time in which the market kind of bottomed out, and it has since recovered and done pretty well. And it was one of those companies that I got some comments and feedback from my clients when I bought it, which it's not super common. You know, every now and then they'll comment on something, but that was one of the ones where I got a lot of comments like, "Why Boot Barn?" You know, and they wouldn't expect me to buy something like that, and so I think I did a video to kind of explain it. Basically, when we took a look at it, it was trading pretty at fair price, about 15 times earnings, which is, you know, a very fair price for a healthy, profitable company. And they had about 350 stores, and their plan was to expand to 900 stores. And we said, well, you know, if they did that, they'd almost triple their store count, and so that seems like they'll probably triple the stock, right? If you bought, and the thing is, every time they add a new store, they don't call us to ask for more money. Like, hey, we're gonna build you guys a new store. You shareholders, you owners, we're building a new store, so we need you to throw in some more money. They don't. Out of the profits from the other stores, they build the next one. And I found out yesterday from the CEO that the return on capital is like 60%. So it's like a very good. That opening a store is a good use of capital. And so rather than pay us out a dividend or do something else, it's very profitable for them with the profits from their other stores to continue to open new ones. And so that was basically our thesis. It was like, we're just going to hold on to them to hit the 900 stores, and we would expect the company to triple, or I mean the stock price to triple. So we went to the annual meeting, and it was just board members. There was maybe at the most 10 people in the room. Maybe 10 people. A couple of employees, and then Charles and I, shareholders representing the investors of Platinum Wealth Management. And they were kind of surprised to see us there, even though we had sent an email saying we're planning on going. The company is headquartered in Irvine, so it's just, you know, an hour and a half up the road, hour or so up the road, so we're gonna go. And we got to sit down with the CEO, the CFO, and the Director of Investor Relations, and some of the other board members. And so the meeting lasted about 10 minutes, really. And it was just standard corporation voting of the proxies and approval of the the things that they voted for. Like when you get those things in the mail, or now you get them in the email, like, hey, this company is having their annual meeting and you need to vote on this. It was that. It was like, that was the meeting for them to count those votes and approve the measures on the roster. So it was just like, you read a script, this measure, blah, blah, blah. And, just, there's a word for it. I forgot what it is. This corporate protocol. And so they followed that. They were done. And then they looked at us like, so thank you for driving up. Did you have any questions? And they entertained, and we were able to chat for a good while and pick their brain and get some good information from the executives there at Boot Barn. And one of the things I asked them was, so the reason we bought it was because you said you're going to get to 900 stores. How are you guys doing on that? And could you just give us some more feedback on that? And so it was very interesting what the CEO, Jim, he told us. He goes, yeah, 10 years ago when we were, starting this company and just getting going, we figured our total addressable market would be about 450 stores. And because we're a niche company is what we thought at the time, which they still believe is, it's Western wear, it's cowboys, and it's people that go to country Western concerts and ride horses and stuff like that. And as we began to and those were the markets that he said, that we would go into. And as we began to expand, we went into other markets that were, not so much, cowboys and that. And he said those stores did just as well. And we started to, as we expand, we're like, you know what? This has a bigger total addressable market than we thought. And they raised that number to 900. And he says, now we're thinking about it, and we think it might be higher. We think it might be more than 900. And he gave the example of, he goes, I'm not saying this is what we're projecting and this is what is in our plan to do, but if we look at a company like Tractor Supply, which has a kind of very similar demographic to us, they have 2,200 stores. And so that made me excited that, maybe we might hold it to 900 and till they get to 900 stores, and once they get between now and then, they might announce a bigger number. And if it continues to grow, we'll continue to hold it as this company compounds. And because when we bought it, had, I think, about 350 stores, and they announced at the annual meeting that there's over 400 stores now. So in the year that we've had it, they've been doing exactly what we wanted them to do: open more stores, which are profitable, and they're getting better at it. And they're getting operating efficiencies on these new stores, and their cost to open a new one is coming down a little bit. Their expertise at doing it, and the speed, and they're as they open new stores, they learn every time, and they learn what market to go in, what type of retail space they need, and so. And he told us some of the things that they've been learning, and I said, well, so what tells you that it would be a good market? And he said, there's an art to it and science, and there's some numbers that population density and stuff like that. But if there's a rodeo, if they go to country Western concerts, if they listen to country music. I mean, I know I've driven across the country, and not at one time, but at different times I've driven through different parts of the country, and you turn on the radio, and in some places, every station you turn to is either country or Western, and it reminded me of that line in Blues Brothers when they showed up at that one place, and they said, well, what kind of music you like? And they said, oh, we like both kinds. country and Western. So that would be a place where a boot barn would probably thrive, you know? And, but he goes, I'm going to tell you the secret sauce. This is what the CEO said to me. He said, here's what we really look for is the propensity to drive a truck. If this is an area where the propensity to drive a truck is high, we'll probably be successful in a boot barn. And when we were thinking about buying it, Charles and I walked into one, and we're like, man, they didn't spend a lot of money on this place, and they're selling stuff, and the clothes isn't as trendy as, say, a Macy's, you know what I mean? So maybe they don't have to be on the ball with inventories. You know, it's not so finicky, like, you know, last fall's stuff won't work or that type of thing, you know. And it's just a lot of work clothes, a lot of work boots. A lot of workers go in there to buy their work boots, and I think if not just cowboys, I mean, they could be work in the oil fields or in construction, or anybody that wears the boots to work and drives trucks to work, they probably go to boot barn. And I have a client that fits that demographic, and when I told him I bought boot barn, he goes, oh yeah, that's where I go buy my boots. And you know, if you're in your boots 8 hours a day plus, you're gonna buy the best, right? You're gonna spend some money on that because that's like one of your tools, man. That's what you're in all day. So you're going to be more quality sensitive than price sensitive, and once those things wear out, you're going to go get a new one again, you know. And while you're at it, you're going to get a pair of those work jeans and those work shirts, and you know, cart type of stuff, Ariat. And so it's a very good market. And so the things that we thought about the company, they confirmed when we went there. And it was funny because before we walked into the meeting, Charles and I had lunch and we were talking about the company, and the things we were thinking about the company, it's like they were saying the same things that we thought they were saying in the meeting. And we'd look at each other like, did they hear our conversation? Because one of the things that we learned in the meeting, we were under the assumption that they had 10 stores in Canada and 2 in Mexico. I don't know where we got that information, but that's what we got, that information from someone. We thought it was correct, and we mentioned it to them in the meeting. They said, oh no, we don't have stores in Canada or Mexico, we're just US. And they said, we don't even have any in Alaska, but we're getting ready to open one in Alaska. And we looked at each other because we said, you know, Alaska would be a good market for them. You know, that blue collar worker that wears boots and drives a truck, you know. And so we laughed, and they say, oh yeah, no, we're not international yet, except online. They have online sales, and they say, you know, 2 of our big markets are Australia and Brazil, and some Mexico. And we looked at each other because we said, you know, this brand would, I think it would probably work in Brazil and Australia. So, you know, it felt good that we were thinking the same things that they were thinking. But they reiterated, we have no immediate plans to go international. We have so much white space, was the word he used, in the US. We have so much to fill that, you know, that's where we're going to get to 900 just in the US. So that was encouraging to me, because they think they could do more than 900 in the US, and that's not even going international. So I'm starting to kind of feel like this might be a company that we'll hold on to for a while, because it's pretty reasonably priced, and our thesis is bearing out. And not only is it bearing out, it's where the numbers that we projected. I told Charles, let's do an updated report on this company, you know, 1 year in, and we're having to up our numbers, what we expected to happen, based on, you know, new news and sitting down with the executives of the company and seeing what they're actually doing. So that's just an update on Boot Barn, and kind of one way we look at companies and how we kind of try to stay on top of what's in the portfolio. And when we bought it about a year ago, another company that we looked at the time was called CAVA, and it was a similar thing. The two things that we're looking for in that type of company is proof of concept and scalability. Does the concept work? Or have they been able to make that concept work profitably? And are they able to scale that across multiple stores or multiple customers? And the answer was yes. The one store worked, they opened the second one, it worked. The 100th store continued to work, right? So the concept proved out, and the scalability is evident, right? Same thing with CAVA. It's kind of a Mediterranean Chipotle, and same thing. They have a certain number of stores, and their plan is to do a multiple of that number of stores over the next several years, right? Without asking me for any more money, but CAVA was not profitable, and the valuation was just way higher than, they were pricing it as if they had already opened 10 times more stores than they have, and there was a lot of hype around this one. They had just IPO'd, and the market was excited about this because they considered, what if this is the next Chipotle? Because Chipotle has been a very successful investment, and so people kind of look for the next one, right? And so kind of CAVA was considered by many to be the next Chipotle, but it was already priced in, and I didn't buy it. And I will say this: if I would have bought it at the same time, it was around in the 30s, and right now it's around 120. So it would have been a good investment too, a good return on the investment too. But right now it's trading at 300, and it's since has gone profitable. They have about a 5% margin. But restaurant is a very competitive business. There's a CAVA here by my house, and it's in between like 6 other really good restaurants. 7. There's a Cuban place right next to it. There's a Tender Greens. There's like an Italian place. There's a Panera, and there's another, and they're all good. And CAVA's right there, and CAVA does have a line of people, during busy times, of people wanting to get in. But it's not like, once you prove that you're successful, you could jack up prices and jack up your margins. You can't do that if you're right next to all these other restaurants that are also good. So, it's not a high margin restaurant. Is not a very high margin business. They got to get it on the growth of stores. And if they're trading at 300 times earnings, they could 10x their store count and the stock price not go up, and they'd be at 30 times earnings, which is that's more than Boot Barn is now. So if I would have bought CAVA a year ago, I'd probably sell it now because it's priced for perfection. Now it might keep going up. So that's a company that it went up on hype, and compared to Boot Barn, it went up on more on fundamentals, and I think that's the safer money to make. So I'm happy with owning Boot Barn and making the money on the fundamentals of it, rather than buying something based on hype and trying to get out before the smart people get out and run it down. So I think it's a safer position. It's kind of the same fundamental story between Boot Barn and CAVA, but I think based on where the price is and the valuation, that Boot Barn is the safer bet. And that's kind of what my clients are looking for me to do. And I think they would be just as happy with me doing Boot Barn and rather than CAVA. So just want to give you an update on that, and we'll give you we added another position to the portfolio. I think in our next video we'll talk about that position or rationale for that. But just want to let you know that we're kind of keep an eye on what you hold, because it's the same thing that I hold personally, and we want to make sure that our portfolio is solid. So I hope you guys have a great day.